In today's show, you'll hear investor perspectives on healthcare and its impact on startups. This is Investor Perspectives. I'm the host of Investor Connect, Halti Martin, where we connect startups and investors for funding. COVID-19 has changed the landscape for startups, giving us a new normal. During the pandemic, it became clear the need for changes in our healthcare system. We have joining us Jun Deng of Joyance Partners, an investor in the healthcare space. I hope you enjoyed this episode. So let's discuss how COVID-19 is accelerating the healthcare sector. Which subsectors in healthcare are you seeing the most change, both positive and negative?
That's a great question. I think, take healthcare, for example, like one of my great portfolio CEOs said that he felt genies are out of lamp for digital health sectors. So as you know, traditionally, healthcare investor peers had concerns about the liability issues and accessibility issues about digital health. But there are debate even in the venture capital field on whether digital health was a bubble or not. But now we see that clinics are shut down, rehab centers are shut down. So suddenly, the new way has become the only way. And one of Wall Street analysts we follow a lot predict that one of the impact of COVID may not be as dislocation, but more of an acceleration of the future. So what used to take decades to become reality now becomes reality. I can give you a couple of examples for our digital health companies. One of them is called Nimble Science. It develops training apps to combine cognitive quiz with balancing trainings and made that process very fun for senior adults to use. So they have seen 10 times of quarter-over-quarter growth, and they hope to grow 100 times by the end of this year. So they right now signing big contracts with insurance payers to deploy that balanced training fall prevention apps to their covered users. Another of our portfolios, Lark, creating AI-only nurse that they can handle that chronic disease condition so well that it qualifies for current human RN insurance codes. And Lark is positioned for a dramatic growth because of this COVID crisis. It's because the beleaguered hospital customers are actually asking them to take over their chronic disease patients from the hospital.
Well, great. So we've been seeing healthcare moving to the home over the last few years. And do you think COVID is going to accelerate this in some ways?
Yes, absolutely. In a lot of ways, remote monitoring, telehealth, remote rehab exercise, at-home diagnostics. So we have suddenly seen lots of companies try to tackle each of these subsectors.
Great. And, in telehealth, of course, it's coming, but it's been coming slowly. And in looking at HIPAA compliance and looking at another groups, they have rules that make it difficult to use. When do you think we'll see those rules changing? And so we'll see the expansion of telehealth tools across the spectrum of healthcare?
That definitely has been the choose. And I think beginning of February, there are new policies coming out, new code coming out for telehealth to build. So several of our portfolios like Iris Vision, which assists the low vision patients, and they are now trying to develop COVID brand product to allow patients to speak with their ophthalmologist through their platform, and they are able to build a code. So definitely, I think from the policies perspective, they have lowered the barrier and accelerated adoption.
Okay. Great. So what new applications within healthcare do you think we'll see come up in the next 12 months?
New applications, I think I have given a lot of examples, such as diagnostic at home. Instead of going to hospitals to do annual checkups, they would send someone to your home and measure your body matrix or even draw blood from you at your location. That's one thing. And I definitely, for the past few years, I've seen more consumer-driven health. Consumers used to be doctor in demand, and they tell you what to do for healthcare. And now consumers are absorbing information and they're making decisions for themselves. So consumer-driven healthcare is going to be another area I think definitely worth looking at. And the third area I would say is the mental health areas. People isolated, people are anxious. There will be a surge of mental health management, digital therapeutic solutions in those areas. So I think these are the areas I see. Definitely, there are going to be a lot of unmet need out there, and there will be companies coming out to tackle these problems.
Right. So you talk about remote monitoring, and there are examples like the Apple iWatch that people wear for personal monitoring. Do you think Apple's going to move aggressively into healthcare with the Apple iWatch? And do you think that could actually be bigger than the iPhone, given how much more important healthcare information is than just standard communication?
I can predict what Apple does. I think Apple and Google and Amazon and CVS, all these big companies, they have put a lot of thoughts in healthcare and how to help people manage their own health for quite a few years. And they are, in fact, acquiring a lot of companies for the past few years. I think they definitely are big players in this ecosystem and help develop toolbox out there, develop APIs for more and more talented people to co-develop products to accelerate adoption of new healthcare models. So definitely they are playing big roles in personal health, new way of doing clinical trials. I think they're doing a lot of innovative, creative things.
So we hear a lot about digital therapeutics, but the question is it really ready for primetime use? Do you think we'll see immediate benefits of it in this time frame, or do you think it's an emerging technology that has promise for the future, but not now?
I think a lot of leading companies are trying and doing a lot of trials and testings in these areas. And some of them are actually have gotten or in the process of getting regulatory approval. So it's all about their data, right? In healthcare, it's all about their data, whether in their clinical trials, whether they can provide similar results or better results comparing to pharmaceutical pills, drugs. So I think it's going to be overall, this sector is going to be accelerated. It's difficult to. So I think I'm more positive in for this sector. And I think the current status is a lot of companies are developing new solutions and testing them, and will get them through the regulatory process for the next few years. So there will be promising results coming the way. I think that's my perspective.
And you updating your investment thesis for healthcare at your fund based on COVID-19?
Not a lot. I would say, like, for our fund, Joyance and Social Starts, we invest in new science and technologies for health and happiness. And for healthcare in particular, we invest in a lot of digital health, mental health, neurotech, senior care products. So all of this, we are seeing actually good performance out of these sectors. We did a stat analysis for our 200 active portfolios, collected 90% of the data points from them. More than 50% of those companies have over a year of runway. A good percentage, over 10% of them, have actually raised up round during this COVID crisis area. And 80% of the company reached profitability. So we are pretty gratified to see what happened to our portfolios. I think overall, we try to use this period, reconnect with our portfolio, and try to provide strategic and mental support to them. And definitely, we advise them to make sure that they extend their runway, cut the costs, and provide them financial resources. But overall, investment strategy, I don't think there's any adjustment right now.
Great. Well, it sounds like you have some great portfolios and that they're running their business well. And it sounds like they're COVID proof. What does a startup have to do to COVID proof their business for the future?
Sorry, I didn't get that question.
Oh, so what does a startup have to do to COVID proof their business?
Prove their business? Okay. So a few advices we give to our portfolios, because is that what you're asking?
That's right. Yeah.
Okay. So for the VC industry, like everyone else, for initial few weeks to few months, I believe a lot of them are pausing their investment, reassess the market, reassess their own portfolio. So I did advise my portfolios to cut the burn rate, extend the runway. So survival is mission critical for them right now. And our backend, the CFO has put together a long list to provide them like alternative financial resources like government loans, non-dilutive grants, foundations, even corporations that share the same strategy values. So we advise them to start building relationship with VCs, but really be serious of raising VC money, maybe second half of this year. Another thing we mentioned to our portfolio is that from PR marketing perspective, because a good percentage of our portfolios are consumer products. So everything right now will be buried in COVID. So it will be battle to get noticed even now more than any time before. So if you're early or in a stealth mode, it's acceptable to stay there for a couple of months and launch after the world is released from quarantine, right? So if you must launch now, make sure that you incorporate the COVID into your strategy, pricing, messaging, so whatever, wherever that is appropriate.
Great. And what are maybe some creative new funding sources some of these startups could make aside from VC funding?
Definitely. There's a lot of government loans right now there, as I'm sure you know, the PPP loans, non-dilutive grants. There are, you can also think of, be creative about some foundations or the big corporations out there that they potentially have an interest of your product. They could be a strategic investor.
And how does one go about diversifying one's supply chain? We saw a lot of supply chain disruption, and it seems like everyone's going to have to make their supply chain more robust. What do you see your portfolio companies doing in this direction?
I think my partner focused on the consumer products part probably can speak much better than I do. But from my partner, Holly Jacobs, she focused on a lot of emotional consumer products areas. And one thing she did mention to me is the companies right now are doing good in the consumer section is those companies who are able to diversify their supply chain and be prepared for the surge of the demand. Because some sectors there are a surge of demand from the consumer perspective. So if they are able to maintain their business as usual, and they can harvest to increase the demand.
Great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
Maybe I'm happy to talk about personal happiness and education, which are the other two big areas that we are from focus on. It's not my focus area, but I think we definitely see acceleration in personal happiness because everyone's isolated and anxious. Restaurants are closed. I think because of that, delivery surged and people started caring about their own nutrition in a way that only have been seen in higher income segments, right? Previously, home design, home decoration surged a bunch. One of our portfolio is a homegrown grains company. It's called Hamama, was rising during this period. And that said, there's one winning category in the consumer product area, which is the sexual wellness area. And this entire category actually surged. And another of our portfolios, Mbound, has been a pioneer company in this space, really helping transform this sort of icy category into a more of a reputable category. I think another area I want to bring up is the education area category. So we also did probably a dozen investment in education sectors. So needless to say that parents need to do homeschooling for their kids right now. So COVID just simply accelerated this process. The winners are those be able to provide to meet the demand with the best technology and best content. One of our partner focusing in this area, and he suggested that going forward, he predicted that going forward, the strongest new companies going to be part of both the brick mortar institutions as well as part of the homeschool. Our portfolio, Epic, emphasized the duality and has been doing really well during this period.
Great. We're looking forward to seeing more homeschooling and distance learning and so forth. What do you think the key is to get the K to 12 schools to adopt homeschooling and online learning techniques? It seemed like we didn't get much from them in this past lockdown, and parents were left to school on their own. What do you think is the path forward there?
Well, definitely no one's prepared for this. But But I think after this period, at least for me as a parent, I appreciate more of the existence of the physical school. So I think actually going forward, like school probably will adopt more remote learning, digitization, incorporate more digitization technologies into their teaching routine. But on the other hand, parents will be more appreciative the physical experience of sending their kids to school.
I agree. It's certainly a thing when you have to do your job and the job of the teacher at the same time at your desk. It can be overwhelming at times. So looking forward to getting more prepared for next time, if there is a next time. But it's a possibility, and it's a great catalyst to make changes to the system. So it's a good thing to look forward to.
Absolutely. Agree.
Great. Well, appreciate you taking time to talk today and hope to have you back for a follow-up soon.
Sounds good. Thank you. Thank you, Paul.
Thank you for joining us today. As always, be sure to leave a review, subscribe to this podcast, and share it with others. Let's go start up something today. Halti Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.